guys, today we'll be diving into market structure. As a trader, market structure is something you should take too serious. You need to understand the trend of the market for you to decide going long or short in any pair you find yourself. When we talk about market structure, we have the basic market structure. When we talk, we have the basic market structure, which is what we're going to be talking more about today. And we also have the algo market structure, which will be on our next class. So let's talk more about the basic market structure. So when we talk about the basic market structure, talking about the trend of the market, where we have the uptrend and the downtrend. Let me write it down. Trend of the market. Simply market trend. We have the uptrend and we have the downtrend. And we have the downtrend. So when we talk about the uptrend, in a scenario when you start seeing a series of higher highs and higher lows, highs being taken out and lows being respected, we say the market is on an uptrend, market is buying and market is bullish. That is how we call this uptrend. Now on the downtrend, so we start having a series of lower highs and lower lows, just like this. Start seeing lows be taken out and highs be respected. We say that market is on a downtrend, market is bearish, selling. Yeah, that is how we call this. So these are the two market trends. We also have the ranging market. We're not going to be talking about it because our focus as traders, we really want to be on the uptrend or the downtrend, not really on the ranging market. When we say the ranging market, is simply when market is ranging, it's not taking highs, it's not taking low, it's just ranging within this swing structure. I'm going to show you guys when we head to the chart. So these are the two market trends that we have, and let's go to the chart to show you guys chart. If you continue with our structure, so the basic market structure, we have the swing structure. Write down again. Basic market structure. We have the swing structure. We have the sub structure. And we have what's the other guy? Minor structure. Here we have the minor structure. So swing structure is our new words in the market. It helps us identify where market is currently trading to, so we can follow the trend and make money from the market. When we have the main swing pictured out, we know market trend and where market is likely trading. Our main trend is break by swing structure with a full body candle, not a wick. So guys, this is the swing structure. Let's start with the uptrend, guys. So in an uptrend, for it to identify your swing, you really want to see a move like this that give you a main focus zone to be watching out from. So when you have a swing, you already know that you are trying to look for trade when it is swing like this, right? So this is what the swing really means. It's just like the last low that were expected. Let me let me use this as an example. Let me see when you had this last lower high before this, and this higher low before this higher high. You saw this next drop, then you take out this low, right? You respected it and it pushed to the upside. So that zone where the market respected, that the low that market respected, which is from this low to this high, which give us a main focus of where to find our trade, where market is likely coming to tap in for us to continue the trend of the market. So that gives us a specific zone for us to be watching out for our trend, the low and high, where market needs to come back for us to picture our next trade and be on the next market continuation trend. So when you have a swing like this, so it's also as the same as the sell, just like the upside down of it, like this. Let me just draw it. How to do that? So like this. Okay. So this is for the sell as well, giving you a more specific zone. A zone, a swing word for you to find your next trade, guys. So when you have your swing like this, you always want to have a reversal, right? Coming back. You always want to have a reversal like this, coming down to your low like this, before you get to see a reaction like this after getting close to this zone right here. From here, this to like you always come close to the low before you see a push to the upside that is going to take out this high, giving us another bullish. That when the high has been taken out, that is market is continuing on that same trend, like the bullish market trend, and you also want to continue seeing it like that, uptrend, like that, going right. So that is the swing structure, giving you a picture of where you should be watching out to trade off from. Like it's giving you that swing watch where to, you get, guys. So you don't have anything to do below this low. When you have this low, you don't have anything that market gives you below it. You don't have anything to do with it. That's not your business. You're focusing on the swing. Yes, so that's really what swing really mean. And you see this reversal coming down, that's coming down like this, because when you have a swing like this, you're not trying to trade off from this high to continue buying like that. No, you always want to wait for a reversal coming down into your point of interest. So the point of interest is always lying below like this, close to the low that you want market to respect. Then you continue seeing a reversal coming down like that. So that reversal that is coming down like that is what we call the substructure. So substructure is simply the reversal coming down to your where you're interested in placing your money in the trade. The trade that you saw, like the trend of the market. Okay, so that this market is in an uptrend, you want to continue it. So that reversal to the place you're making your decision is what we call the substructure, guys. And the main move that you're trying to catch, which is the next push to the upside, giving us a new higher high and continuing like that, is what we call the minor structure. So minor structure is the main move you want to catch. So just like the swing is giving you the picture of where to watch out from, the swing or the way you should watch out from to trade up from, like the low market should not break, that you should respect, and the high that need to be taken out, right? So that is what this swing really do. The low that needs to be respected and the high that needs to be taken out. And on the downtrend, the swing is the high that needs to be respected and the low that needs to be taken out, like that. So let me do the same substructure on the minor on the sell. So when you have your swing like this, giving you the high the market needs to respect and the low the market needs to to be taken out, you get to have a reversal that comes like this, coming down like this to your point of interest, which is always close to the zone, before you see a massive push going to the downside to take out the low for the downtrend to continue, market to continue selling, right? So that is just it. So this reversal is the substructure, while this move that you want to catch to take out the next low is your minor structure, guys. So there's one point of interest which we're going to get to. So that is where markets always come back to the top for you to either sell or buy, guys. So I think I've break down basic market structure, guys, for you. So let's go to the charts. Let's have a little look at the market for this our structure, basic market structure, the uptrend and downtrend. So straight to the charts, let's use which pair should we use? Let's use GPJPY. Let's use GPJPY. So I'm currently on the forward time frame. Let's go below so that we can get to see multiple faster. So this you can see that we was having a series of downtrend here. You can see we was having a series of higher lows, lower low, lower high, lower low, lower high, lower low, guys. So this is the downtrend. You see the market is on a downtrend. It's giving us lower highs and lower low, lower high, lower low. You can see that this high was respected. Then we have a sell to the downside. Then this as well was respected. And then we had a sell to the downside, and you can see that this low was being taken out. This low as well was being taken out. So that's for the downtrend. You always want to see highs to be respected and lows to be taken out. Highs to be respected and lows to be taken out. So let's look for the buys. Oh shit! Sorry for this, guys. Let's look for a buy trend. Oh, my chart is rough. Sorry, guys. I've been busy on my trading view. So I think we have buys here. That's why I'm trying to take this stuff out. So where do we start from? Let's start from here. You can see we have lower, higher low, higher highs, higher low, higher highs, higher low, higher highs. I think continue like that. You can see we was having higher highs and higher lows. You can see that this low was respected, this high was taken out, this low respected, this high taken out, right? So that is the basic market structure for you. That is how you understand the basic market structure, knowing your higher highs, like picturing and knowing when highs is being taken out and lows is being respected, for you to follow the trend of the market, guys. So you see we just saw the market buying and the market selling, downtrend and uptrend. And guys, look at I said I'm going to show you a what do you call it, ranging market, which is the other that we don't really pay attention to. I think we have it a little bit here, but let's look for the one that have multiples of it. Let's see, ranging. Yes, guys. So this is a ranging market. Let's say we're on this high to be respected, and this low to be taken out, because we'll be having a series of sales like this. You see this low has been taken out. Wait, let me see. See, this low has been taken out, and when you say to be respected, and this low should be taken out as well. You see the way it took it out, right? So market is selling. So the ranging market is here, right? Let's say this is our swing, our swing higher than one market to respect and this low to be taken out as in a downtrend. You can see that we was having this multiple candles here that was not really going to this, that is not really crossing this high, neither this low. That is so called ranging market. We don't really know the direction of the market. Market is just ranging, guys. So this is just the ranging market, which we are not going to be talking about. So this is not really what we're catching in the market. So it doesn't have, we don't have anything to do with it. So what really our business way is the downtrend, which is this. You can see low, high should be respected, low should be taken out, high should be respected, low should be taken out, and the uptrend, high should be taken out, low should be respected, high should be taken out, low should be respected, just like that, guys. So guys, that is just all about the basic market structure, and thank you guys for watching. And in the next video we're going to be talking about let's catch up with the algo market structure. Yes, that will be the next. So thank you guys for watching. I'll see you in the next video. Peace out, guys.